Welcome back to the Startup Showdown podcast, where we discuss pitching, funding, and scaling startups. Join us as we interview winners, mentors, and judges of the monthly $120,000 pitch competition powered by Panoramic Ventures. We also discuss the latest updates in software, Web3, healthcare tech, fintech, and more. Now sit tight as we interview this week's guest and their journey through entrepreneurship.
Lee Cantor here, another episode of Startup Showdown, and this is going to be a good one. But before we get started, it's important to recognize our sponsor, Panoramic Ventures. Without them, we couldn't be sharing these important stories. Today on the show, we have Kevin Mobolade with Swipe Credit. Welcome, Kevin.
Thank you so much for having me, Lee.
Well, I'm excited to learn what you're up to. Tell us a little bit about Swipe Credit. How are you serving folks?
Thank you. So Swipe Credit is a platform that helps lenders grow their cash flow and reduce their risk. And it's done in a way that also empowers them to boost the social impact opportunities that they're providing in their local communities. So we're a Techstars backed company. We've got investors such as Western Union and Panoramic Ventures. And our mission is to help grow these organizations' bottom line, but as we're doing it, helping them to be more inclusive in their lending practices.
So what was the genesis of the idea? What inspired you to go on this adventure?
And it's definitely been an adventure, I'd say that. So my personal background, my personal origin story is I'm a first generation American. So my parents immigrated to the U.S. in the early 1990s, and really seeing them navigate the financial industry as being under the category of too thin file because of the immigrant status, and a lot of the struggles that they dealt with in terms of getting access to loans and other financial resources as immigrants in the country. So my background is in data engineering. I've worked in the subprime lending industry in Atlanta for many years. And even seeing from my own personal story and then seeing that same pattern repeat itself in the data with prospective borrowers working for these organizations, I realized that there was an issue. And I think that was really what galvanized myself and my team to do something about it, not only to help kind of grow these organizations' bottom line, but also to help fix a lot of the social fabric issues that we're seeing kind of play out in the news recently in the U.S.
So now, can you educate the listener a little bit about what is kind of this maybe inherent bias that's going on in the industry that they're not offering financial solutions to certain groups of people where it sounds like your solution does that?
Yeah, so there's actually a study that was produced by Citibank in the fall of 2020 where they were able to actually quantify the size of this issue. It's around $800 billion in lost lending opportunities per year, just due to be it conscious or unconscious bias in the loan vetting process. So typically, lenders leverage the traditional FICO score, TransUnion, Equifax, Experian, and they use that as an indicator of whether or not a person has the ability to pay for a loan. But what we're actually finding is that there's a large portion of the population that can't be scored by those methodologies, just due to the antiquated nature of our credit scoring system. However, with these individuals, the top 1% of them actually are fantastic payers. They pay their bills on time, their rental payments on time, utility payments on time. They've got mortgages. They're making these payments, but the traditional credit scoring system is not able to see that. And due to that, these individuals are rejected in the application process.
So now, because of your history, I guess, in the industry and then your personal history, you were able to kind of connect some dots that maybe other people that are more seasoned in the industry weren't seeing, or they were afraid to maybe go out into this space and say, okay, there's people we're missing here. They either dismiss it as not a lot of people, or because I would think that it's in their best interest to, give credit to as many people as possible. That's their business, right?
Yeah, so we're helping them to reach new markets. This is definitely stemming from my own personal lived experience, not only working as an engineer in the industry, but also just being an immigrant, being a first generation American, and just seeing just my own parents. Like, little examples, like both of my parents have owned their own small businesses for over 20 years. They've made their, easily $2,000 or $3,000 a month rental payments on their physical locations, and none of those payments have ever been reported to the credit bureaus. They've never gotten credit for those types of transactions. And if a lender were able to see that and see their reliability over the course of time historically, it creates a strong, compelling case for giving these types of individuals that typically, if they're just too thin filed, a second look. So we look at it like where the tool gives these lenders a new pair of glasses to view this population, and also provides them with recommendations as to why they should give this prospective borrower, another opportunity, even though they might have been too thin filed to be scored via the traditional methods.
Now, is this a situation where these traditional methods, these incumbents, have been around for so long, it's something that's just kind of taken for granted, like this is how we do this, and we don't look elsewhere? This is just
exactly.
And I don't want to be the one that gets fired for suggesting the new thing when we know this old thing maybe doesn't work well, but it's what we've been doing for forever.
Yeah, so it's, people are, we're creatures of habit, and we're not trying to replace in any way, shape, or form, the TransUnions or Experians of the world. What we're doing is saying that due to these new mechanisms, machine learning, neural networks that are available to us, and we're actually seeing this in the data that we're producing out of the platform, that if you look at women or minorities or people that are too thin file, the top 1% of them perform just as well as the highest, the riskiest white male borrowers that were accepted. So the proposition is that, and this is backed up by data coming out of Citibank, that there are hundreds of billions of dollars a year that are just left on the table just due to, just doing things the old way. So we're not saying replace the old way. We're just saying to evolve the old way with additional tools that can help you make more money at the end of the day.
So having this idea conceptually and then having tools to actually bubble up who are the right people to give credit to, that's a leap into itself. How did you kind of build the machine that allows you to bubble up these appropriate folks for the lenders to choose, and that they know they're the right people that are going to, pay back the money?
Gotcha. So from the lender's perspective, the implementation of it is very seamless. It's just one line of JavaScript that's added to their website, and it's just a pop-up on their website, be it their loan page, where an applicant can opt in their banking transaction, their cash accounts, or their banking transaction history. So we've built an algorithm that looks at certain parameters such as cash on hand last day of the month, rental payments, utility payments, mobile phone payments, subscription payments, and then based upon those parameters, matches that to an ideal borrower model. To keep the standard high, obviously, we only want to surface up those top 1% of applicants because we want the lenders to realize increased revenue growth from these candidates. And then those are surfaced up in the dashboard along with recommendations as to, certain things that they weren't able to see via FICO. As I mentioned before, some of those certain parameters they weren't able to see. That's the first portion of it. We also do additional fraud monitoring. So looking at the transaction accounts and providing the lender with a report of any type of suspicious activity on the borrower's account once they create a relationship with this borrower in terms of lending to them. And then we also help them with collections as well. So setting up specific, say it's the 1st of the month or the 15th of the month, where a bill is due, helping the borrower to pay that bill directly to the lender, and then reporting that to the credit bureau to also help boost the credit score of the borrower. So it's a situation where everyone who's a part of the platform wins.
Now, as you conceptualized this and started rolling it out, when did you start feeling like, hey, we have something here? This is something that can work. This can help a lot of people. Because this is something that goes beyond, like, it sounds like your startup is kind of more mission focused, as well as you want to be financially successful. But this is kind of has a bigger why behind it.
Yeah, so I think the pandemic really illuminated many of the I like to call them like it's kind of cracks in the pipe in the way that money flows in the U.S. We saw this with the distribution of loans from the federal government. Many small businesses went under during the pandemic simply because they didn't have a relationship with these financial organizations. There was no trust for a lender to provide a loan to an unknown entity when they can just give it to the LA Lakers or other known established entities. So seeing those stories come out of the pandemic, that was the first light bulb moment. The second light bulb moment, after we've already onboarded a handful of customers, is being scouted by large, Fortune 500, top 50 banks, and sitting down with their teams and seeing their own internal initiatives specifically focused on tackling this issue. So we definitely know we're moving in the right direction. We've had a very large wealth management firm out of New York reach out to us in terms of becoming basically that go-to solution to help them to reach this population group, a large payment network. So these are all things that have happened in the last a few months of the top of this year, and sitting down with decision makers at the VP level and above, and them telling us specifically out of their own mouths that we're definitely hitting the nail on the head. This is the right time in history for us to be deploying this solution, and we're looking to be that end-to-end solution that becomes industry standard across the board in the next 3 to 5 years.
So how did you go about building your team?
Oh, so my team. So we're all good friends. So our CTO, Dr. Charles Lively, we actually met in undergrad. So I've known Charles for well over a decade now. Great human being, lethal engineer, and just fantastic all around good guy. And then Chris, our chief product officer, and I actually worked in the subprime lending industry for many years together in terms of our careers. And we're all, so I'm a Liverpool soccer fan. I'm a big English Premier League fan. And unfortunately, Chris is an Arsenal fan, but we won't talk about that. So yeah, we're just family, honestly. And we come from this community. We understand the problems intimately. And, we've built a solution that we believe will help to, grow the economy, grow the country that's given us so much value and opportunity, many of us being immigrants. At the same time, help these organizations safely and reliably reach this underserved population group. First and foremost, grow their cash flow, grow their organizations, but ultimately create those create a better harmony within the communities that they serve by being able to be more inclusive in their practices.
Now, was it a difficult decision for you to take the leap from leaving this, steady job and then going into this unknown?
I am definitely a man of faith, and I feel like, this is my purpose in life. So both of my parents are entrepreneurs, as I mentioned earlier in the call. So I always had that desire to build something of value. And not just, work within someone else's system, but to build something that can provide value to people. I already had that itch from a young age. And when the opportunity presented itself, and it was just a light bulb moment, I had experienced my own lived experiences. I felt this pain. I've seen it in my own communities. And then to see it really illuminated by the pandemic, and to have the hard quantifiable data backing it up, it was like all systems are go, green light to move forward with this. And as I mentioned before, I move in full faith and whatever it is I'm doing. So, God gives me that confidence to, just to follow the journey. And it's been an amazing journey. And it's something I'm very grateful for and thankful for.
Did your partners kind of like together, you all said, okay, let's make this leap, or did you make the leap first and they came along?
Yeah, as the CEO, you are the tip of the spear. So I did make the initial leap, but once I had enough proof points, both of my co-founders also jumped ship as well, and we've been growing ever since. We're actually looking to expand our team in the next quarter or so, and yeah, a lot of people are really excited about it. A lot of interest from investors, and we're just grateful to be able to ultimately serve, the country that's given us so much value to be able to get to this point. So
now talk a little bit about the fundraising element of this. You mentioned, kind of a who's who of people that are backing this now. Was that difficult? Because that's another challenge that isn't the same challenge, right? Because that's a business unto itself, is attracting people that want to support, financially kind of invest in your vision. Mm-hmm. How did that go? And for example, how did you hear about the Startup Showdown and Panoramic Ventures? Let's talk about them specifically.
Gotcha. So in terms of the first portion of your question, fundraising for any founder is a challenge, regardless of your background. And it's its own sales funnel, and it's its own sales funnel. You have to be able to address the needs of the investor who is your client, because they're looking to grow their portfolio. The investment that they give you, they're looking to grow that and return great returns to the LPs that believed in them. So ultimately, you have to de-risk your value proposition as much as possible. Show that you have the team that is strong enough and has enough domain expertise to be able to kind of operate this machine. And also you have a big vision that can return the returns they're looking for that make sense for their business. So it's its own game in itself. Discovering Panoramic Ventures Startup Showdown, I think I was on Twitter, I believe it was like early 2021. I want to say I was on Twitter and I saw them promoting it. And obviously I'm a big fan of Paul Judge. He's a hero in my eyes in terms of the venture community and all the things he's done. He definitely deserves his roses now, not later. He's done so much for the venture community. So just being a follower of him and what he's doing, I just kind of discovered the ad for it. And I just applied, just put my best foot out there, and it ended up working out for us. So very grateful for that.
Is there an obstacle or a hurdle that you overcame that you can share? Maybe you don't have to talk about the exact hurdle, but how you addressed it and go, okay, this is one of those moments where we have to get through this or we're going to be in trouble, and then share how you together as a team overcame?
Only one? There are a couple of them on this journey. I don't know if you know, but I think I've heard that quote, smooth seas don't make for good sailors, right? So there's definitely a couple of them. I would say for just an overarching theme is the mental. This game is really more so mental than it is physical. Having that conviction, as you mentioned earlier on the call, to leave a steady paycheck and to go months and months and months without knowing when your next check is coming from, or how you're going to pay your rent or your bills. I think the entire journey is really a journey of self-development, self-belief, and also just being able to control your mind. I think your mind is the biggest obstacle you have to overcome. Eliminating self-doubt, limiting beliefs. And as long as obviously you're making sure that you're doing the proper research, you're asking the right questions, but if your intuition is telling you that you're correct, you're most likely correct. So just trust that, and have full faith in yourself as you move forward. And then typically what ends up happening is the right opportunities and the right people come to you at the time when they're supposed to arrive. And it's just a matter of you having faith to be able to get to those points in the times when it's quiet or whatnot. So I would think that, the mental obstacle of the game is the hardest to overcome. But when you can overcome that, nobody can stop you.
Has there been a mentor or somebody that was advising you that has helped you get here, or is there?
Yes, quite a few to mention, but my main mentor, his name is Joseph. So he actually owned and he built and sold an IT company and back in 2011, 2012 out of Toronto. And, he's been, my main coach. If you think about this like as a sport, he's been my main coach in terms of first and foremost, the mental aspect of the game. So, as I mentioned before, little hacks that I'll just, give freely on this call is having gratitude is critical. You have to be a person that has a grateful heart and grateful for everything, just even the little things like you woke up today, you had breakfast this morning, right? If you can keep your mind focused on the present moment, exactly where you are, set your goals in the future of what you want to achieve and work relentlessly to achieve those goals, but still be appreciative of the baby steps that it takes to get there. You'll have a much better time as you go through this process. So Joseph has been instrumental in helping me to reprogram my mind to focus on abundance, to focus on opportunities. And when I do have those moments of fear and doubt, giving me tools to help to combat that and just to be present in the moment and grateful for where I am in the journey. So yeah, shout out to Joseph up in Toronto.
Yeah, I agree. I think one of the biggest mindset shifts for me is the reframing of I have to do something to I get to do something.
Yes.
That it's a gift, that this is a gift here, and that people would love to have this opportunity, no matter how stressful and challenging it is. But it is a gift, and to have gratitude along the way really helps you through those tough times.
Definitely. We all have that ability. We all have the ability to control our minds and, not fall into despair as soon as the wind blows or anything like that. So I think it's something that many people are just learning more so about mindfulness and practicing that muscle that we all have, hardwired into us. Right. So it's definitely a critical piece of, be it entrepreneurship, winning an NBA championship. It's the mind that you have to control, and then everything else in your world will follow suit.
Yeah, one of my favorite books is The Obstacle is the Way.
I love that one. Yep, great read.
Right. So it's not there to sabotage me. It's just part of the journey. Just get over it, get through it, get under it, whatever you got to do. That's just part of how it is. It's not a bug. It's a feature.
Yes. It's there to help you, it's there to make you, not break you.
Right.
Mindset.
So now, any advice for the startup founders out there that are contemplating going on the journey of a mission-based startup?
I would say, so my advice, and this is what I've learned for myself too, it's like, you start off wanting to be an entrepreneur like most people because you want to make money. Let's just be real. You want to make money, you want to drive the Lambo and da. But what you discover, it's that, there are many, many people in our country and countries around the world that really suffer every single day. They have real problems. So I would say, as an entrepreneur, start off with, don't try and create a widget. Start off with the problem, right? What is the problem that speaks to you, that you've experienced in your own lived experience on your journey, that you're the most qualified to solve? Start from that problem, start from the pain, right? You want to find that hair on fire pain that you're passionate about solving, because you know that once it's solved, it'll create a better world for people that look like you, for the broader community. Start with that, and that will give you the fuel that you need when the times are difficult to power through those, because it becomes a mission. It's like you become the hero in the story, and you are so attached to solving this problem that you'll work 7 days a week. You'll be up at 5 o'clock in the morning. You'll be in bed by 11. It doesn't matter, because it's more of the joy of being able to solve this issue. And then the money will follow you, like the money follows problem solvers. I feel like if you have that mindset and that approach, you'll fare much better as you progress on the journey. And just take your time with it, have fun. The journey is the gift, I'll say that for sure. And yeah, just focus on, just focus on doing good and being good, and then good things will flow to you.
So what's next for Swipe Credit?
So we are definitely in the process of raising our seed rounds. We're looking to expand our team, hiring some folks in certain roles in engineering, customer success, sales. As I mentioned before, we're seeing the demand increase in terms of our solution. So we definitely need to shore up the infrastructure and increase the capacity in terms of what the platform can actually sustain and hold. So these are all good problems to have. And yeah, that's what our focus is for 2022, and just focus on creating this end-to-end solution that these organizations can use to empower their inclusive growth moving forward into the future.
Is there an ideal customer out there that you're trying to serve?
So our typical customer segment set is anywhere between, I would say, 30 to 40 million in assets under management, up to 5 billion. That's the typical sweet spot that we've seen really resonate with it in terms of the product, the need, and also the sales cycle, keeping the sales cycle tight. But we have seen, as I mentioned before, those brand names, those leaders in the industry also reach out, and we're currently in conversations with them as well too. So once we're able to announce those, I think that'll help to really, galvanize our growth moving forward.
So if somebody wants to connect with you or the team, what's the website?
So the website is swipecredit.com. So that's www.swipecredit.com. And then you could personally reach out to me via email. It's kevin@exploreswipe.com. So it's like explore swipe.com. So kevin@exploreswipe.com.
Well, Kevin, thank you so much for sharing your story today. You're doing important work, and we appreciate you.
Thank you so much for the opportunity, Lee. It's been great.
All right, this is Lee Cantor. We'll see you next time on Startup Showdown.
As always, thanks for joining us, and don't forget to follow and subscribe to the Startup Showdown podcast so you get the latest episode as it drops wherever you listen to podcasts. To learn more and apply to our next Startup Showdown pitch competition, visit showdown.vc. That's showdown.vc. All right, that's all for this week. Goodbye for now.